If you opened your crypto app today and saw Bitcoin down, you're probably wondering what happened. Don't panic. Let's break it down clearly. On April 29, 2026, the Federal Reserve announced it would hold interest rates steady at 3.5 to 3.75%. That might sound like neutral news, but the crypto market didn't see it that way. Bitcoin dropped, falling from nearly $79,000 down to around $75,600. So, why does a Federal Reserve decision move Bitcoin's price? Here's the simple answer. When interest rates stay high, bonds and savings accounts pay better returns. That means investors have less reason to take risks. And Bitcoin is considered a risk asset. So money flows out and prices fall. But here's what most people missed. The vote wasn't unanimous. It was 8-4, an unusually split decision. That level of disagreement inside the Fed signals uncertainty, and uncertainty makes markets nervous. Now, let's talk about $75,600. You may have heard analysts call this a support level, but what does that actually mean? Think of it like a floor. Every time Bitcoin has approached this price, buyers have stepped in and stopped the drop. Large institutional investors, the ones managing billions of dollars, have been accumulating Bitcoin at this level. And that buying pressure creates a floor. Here's the bigger picture that makes this moment different from previous crashes. In April 2026 alone, institutional investors put over $2 billion into Bitcoin ETFs. Even as retail investors got nervous, institutions kept buying. That tells you something important. The big money doesn't see this as a crash. They see it as an opportunity. So, what comes next? Analysts are watching 3 scenarios. Scenario 1, Bitcoin holds between 74,000 and 79,000, moving sideways while the market digests the Fed's message. Scenario 2, inflation data comes in soft, the Fed signals rate cuts are coming, and Bitcoin breaks above $80,000. Scenario 3, inflation surprises to the upside, the Fed stays aggressive, and Bitcoin retests the 70,000 to 72,000 range before recovering. Most analysts lean towards scenario 1 or 2, given the strong institutional buying at current levels. Here's the honest truth. Bitcoin has experienced drops like this dozens of times throughout its history, and almost every time, those who understood why the drop happened and held their position came out ahead. The key is not to react emotionally. The key is to understand what you own and why you own it. 3 things to watch in the coming weeks. U.S. inflation data, known as the CPI report, Federal Reserve officials' public statements on rate cut timing, and Bitcoin ETF weekly inflow numbers. If you found this helpful, subscribe to Crypto Insight for weekly updates, and visit crypto-insight.net for the full written guide with charts and analysis. We'll see you in the next one.